Hello, traders. I want to welcome each and every one of you to this program, this webinar. Promises to be very interesting. I'll be taking you through the chart and what I feel should be on the chart and some of the trades we took the earlier week, some mistakes that I made and how I've taken steps to correct them. But of course, you know that every analysis you just have to start with DXY. DXY on weekly you can see is very bullish. It's a big corrective structure. You know, same thing we said last week, this corrective structure, you'll have to take this trade, push it to the upside. But you can see that this is just a weekly time frame. If you put a daily time frame, you can see that the momentum to the upside is no longer there. And that does not mean that DXY will be reversing. It doesn't mean that it will be turning to the upside. What it just means is that there's going to be a pullback. You know, and how do we know that the momentum to the upside is not there? You see clearly here that you have a push here, correction, push, correction, push. All right. So you can see that in that push, you have higher high. Okay, but on the indicator RSI, you have a lower high. Okay, this means that the momentum to the upside is not there. So all we have to expect right here is a leg lower. Okay, for DXY to correct down before you have another push to the upside. We are really looking for a bigger correction, not a correction of this size. Okay, probably look for a correction of this size, guys. Okay, we want it to appear here, correction of this size, before we can have a push to the upside. So that's just the beginning of the corrective structure we are expecting. But even if you see the RSI right here is still bullish, the momentum is still bullish. Okay, when you come to lower time frame, this way, for us to get involved in the correction to the downside, we have to see a kind of a change in structure. You have to see a kind of a change in structure right now. Excuse me, right now, you see that this is the low, this is the low, okay, this is the low. So for that structure to be confirmed that we're going to have a bigger corrective structure to the downside, you need to see this low taken, guys. This low must be taken, okay, and in that case, you have this three-way structure to the downside, push up. If you have whatever happens here, once you have this break to the downside here, fine, you know that any correction, okay, any correction of that impulse to the right field level, guys, will give you exactly what you need for your entry. Okay, this level, any correction here will give you your entry. That's how you calculate it. And by the time you have this push to the downside, okay, that might just be the first leg, and then the second leg might give you this, and then the third leg give you this to make a WXY structure. And when that happens, I told you we need this size of corrective structure. Okay, this size of corrective structure over there. Okay, this is a complex B correction. A 1, 2, 3, B and C, and then the push up. We need something like that size right here, guys. Something bigger. Okay, need it then for us to have a push side for DXY. Okay, so that's it for DXY, guys. So Euro US dollar. Euro US dollar. Okay, all you need to do right now is to go to the monthly, see what's happening. Okay, even for a kindergarten student who knows nothing, will be able to identify that this pair is on a downtrend. on a monthly time frame. Okay, you have this push, you have this push, you have this corrective structure. 1, 2, 3. You have this push. 1, 2, 3. Okay, you have this push. So what is this again? This is a corrective structure. What do you want? Push down. Can you see? So if you have to look at it very well on this time frame, you have a push that creates a low here, you have the correction, you have another push, you have another correction, you have another push. Can you see that the last push is not enough? Look at this. How do I know it's not enough? Look at this push here. Okay, look at this push here. Okay, look at this one here. Is it not small? Very small compared to the other pushes. So you want something that comes down to this area before you can see this push as enough. Okay, that is on the monthly time frame. You can see the flow of the market is down. It's telling you that it's down. But of course, the market cannot just go down on a straight line, guys. The market cannot go down on a straight line. It has to correct. And you can see that on this wave kept on going down, correcting, going down, correcting, going down. What are you expecting again? Correcting. That's why we expect, as we expect DXY to correct downwards, we also expect US dollar to correct upward. That's our expectation. Okay, and if you go to daily time frame, you will see that the origin of that corrective structure that I showed you on weekly that is supposed to start correction is already beginning to gather momentum on the daily time frame. Can you see on daily time frame? Look at something. You see this wave correction. You see this wave correction. You see this wave correction. You see this push. What are you expecting? Correction. Is that okay now? You are expecting correction. So market is trending. It's trending. That is on the daily time frame. But right here, okay, I'm going to show you something right now, real quick, guys. You see that we are expecting, anytime you are expecting correction, what you are going to see on a daily time frame is that if you are going to expect a correction upward, you are going to see that RSI and stochastic, both of them are going to reset to the low. Can you see? Both RSI and stochastic, both of them will reset to the low. Can you see? Both of them are resetting to the low. This is an indication of what? Of the beginning of correction to the downside. Just the same way that if you are expecting it to push to the downside, you are going to notice that both of them will reset to the top. For instance, let me give you an example. All right, you see that this push to the downside, it's corrected to 50 to 61.8. And then at the point that it should make a push to the downside, you are going to see stochastic and RSI, both of them reset to the top. Okay, that means they are due, the pair is due to the downside. Another thing you use to know this on a higher time frame is that between this circle and this circle, you watch the corresponding points on the RSI, okay, this circle. So if you connect the 2 points, you see that this makes a lower low, but on the RSI, it makes a higher high. Okay, it makes a higher high. This is what is called bearish hidden divergence. Bearish hidden divergence. Can you see from this point to this point is a lower high, but from this point to this point, corresponding level on the RSI is a higher low. That shows that even though this particular level is lower than this or is lower than this level, the indicator or the test we have carried out right now is showing that we are going to achieve a greater push to the downside from here down here. That is why the RSI and the stochastic, they are all rising to the top at this level here. You can see this one rise to the top higher than this one. This one rise to the top higher than this one. Can you see? That's the logic behind it. And it is until you get here, you now begin to move for a trend to the downside. But right now, we want the corrective structure. And if you look at both of them reset to the bottom. All I just need to do is to come to 1 hour time frame, guys. I want to come to 1 hour time frame and see a transition in trend. Okay, I see a transition in trend. If I don't see that transition in trend, I'm not going to get into the trade. But again, excuse me, when I see is an ending structure like this, I want to test, the existence of divergence. And if you see clearly here, there's existence of divergence. Why this guy here is making a lower low? Can you see? This low here is lower than this low is lower than this. But right here, this low here is higher than this one. This low here is higher than this one. For that reason, there is divergence and a move to the upside is imminent. Okay, so once I have that, all I need for my entry is to see a transition. I want to see a trend change. Okay, how do I gauge that? You see this push down, correction, push down, correction, push down, correction, push down, correction, because it has not broken this top, guys. So if it comes this way, I don't have a trade yet. Once it breaks this, there's a change of character. Okay, I've seen that this top, this previous resistance is broken. All I need to do is to find the right fib level for this one for my entry. Okay, and I activate all my entry route for the impulse. Where's the impulse? Look at the impulse to the upside. Where's the correction? Back to 50 to 61.8. Then I also look to define the nature of the corrective structure. And the essence of defining the nature of the corrective structure is to determine the actual fib level that is going to be suitable for that retracement. So if you are having an impulse, and you are having a regular flat, you know that 38 to 50% retracement is going to be suitable. If you are having an impulse this way and you are having a zigzag this way, you know it's going to be 78% retracement. If you have an impulse this way and you are having what is called an expanding flat, you know it's going to be 61.8 or 78% retracement. That's what's going to be suitable for your fib. Okay, so that's how we do it. So I want a change of character from bearish to what? To bullish. And all I have to do is to mark the last resistance for the bearish move. I want to mark the last resistance. Look at it here. So I want this market to break here, and now recognize this as the impulse. Okay, this impulse is what is called originating impulse, guys. So let it correct to this level, and then I take my trade to the upside. That is it about euro dollar. Okay, I want this particular push down to correct. Okay, because if you go to higher time frame, like let's say 8 hours or daily, you see that this is a swing. This is swing. All right, this is a high. This is swing point, swing point, swing point. So I would like to take a fib because I want a major retracement. I want to take this fib of this move to the downside. And if you look at it, I want a retracement back to this level, and then I take my move to the downside. Or in most cases, you can also decide to push higher, to take this level before it moves to the downside. So I've told you what you should look out for in 1 hour time frame. All right, when market open, look forward for 1 hour time frame for a change of character. And if that change of character did not happen, maybe you have this move, you have this correction, you have this move, then you have no trade. You are not expected to take the sell because it's close to where it should start correction. So in that case, once this potential last move happen, you now look forward for another change of character for you to take a buy opportunity. Okay. Next pair is Euro JPY. I want us to look at Euro JPY. Okay. In daily time frame, particularly, I want us to look at this structure. Look at this very well. You see that on the daily time frame, we are in for a very sound and and spot on corrective structure. Okay, because right here, that's why I trade the daily. You have a three-wave corrective structure, you have a push, you have a three-wave corrective structure. You know, what are you expecting? A push. Can you see? This is the structure that I'm identifying for Euro JPY on a daily time frame. And of course, you know that Euro JPY and Euro USD, they usually move in the same direction. So even though Euro USD does not have the same structure, you will discover that I have told you by analysis, by way of analysis, that Euro USD is due for correction to the upside. And can you see the confirmation of structure in Euro JPY that have the same positive correlation with Euro USD, how it has given us a brilliant structure to the upside. This brilliant structure to the upside from Euro USD, Euro JPY confirm that we need a corrective structure right now in Euro USD. So if you see a structure like this, all right, what I do is to go back to excuse me, to daily time frame, and to go back to the stochastic and RSI. I want to see if there is perfect alignment of these two indicators. Can you see down and then down? That shows that this corrective structure is over. Okay, now we are sure that this trade is going to make a move to the upside. So as confirmed by our indicators. So what we need to do is that, of course, you know that this leg that comes down, must develop what is called a minor structure. Of course, you know this is impulse 1, 2, 3 and move. It's a major structure. So within the major structure, you have minor structure. Okay, minor structure. Can you see? It's a structure inside structure. You have a bigger structure, then you have a minor structure. A minor structure, you can see it clearly on a lower time frame. So you will see what I'm talking now. Can you see that we didn't pay attention to all this move on a daily time frame? We didn't pay attention to it. Where we pay attention to is this move 1, 2, and 3. We want to trade this move to the upside on a daily time frame. But of course, this structure that comes down here has its own minor structure. Okay, it has its own minor structure where it makes a low, a lower high, a lower low, a lower high, a lower low, a lower high. It didn't make a lower low, and then it make a higher low. Can you see? This is a change of character already. We have achieved a change of character considering the minor structure that help us to complete the daily structure. Can you see? There is a change of character here. So all we are looking for right now, for us to trade that wave to the upside as identified in a daily time frame, is a corrective structure. Okay, we want this. Of course, you see this correction, move down, correction, cannot break the low. If this one comes, break the low, no problem. We have no trade yet, but it must come. Okay, maybe come this way, it must break this top. This will now become the recent resistance that must be taken. Okay, then the correction of it will now take us to the upside. Do you get it now? So if this structure comes, it doesn't mean that our analysis is wrong. No, it just then means that it is not ready to go as we expect. But we must leave it, and some people will ask now, if that is the case and you are seeing this, what is going to prove that you are going to break this low? What is going to prove it? What is going to prove it is very simple. You are going to see a trend. You can go back to 15 minutes time frame. You are going to see the market giving you a trend. You see a push up, a correction, a push up, a correction, a push up. You are going to see a push down, a correction, a push down. It will begin to form a trend until it will break this low. But what we are saying is that as it's forming a trend to come down, it's also forming a minor structure. So you are going to wait patiently to see a break of that minor structure, correction to 5061.8, and boom, to the upside. You are targeting not a sell setup, you are targeting a buy setup. And it is only a change of character that is going to give you a sense of when that buy setup commences. Within the week, I was trying to take a trade on Euro JPY because I have seen that we have this is the this was the last low. Okay, this didn't break this, it just broke this high a little. It came down and it did not break this low. So this has become a higher low, Okay, when this one comes, it broke this top. So I was really expecting just a correction. I was expecting this correction to come to 50 to 61.8 of this impulse. It did not come. Rather, you just saw this engulfing candlestick right here. Okay, I say if that's the case, maybe it's ready to go to the upside. So I call my trade, which absolutely is wrong because I did not respect one of my entry rule. That entry rule says that after you treat this one as an impulse, this must correct to 50 to 61.8. And in that case, when market resume, there's possibility of this market coming to 50 to 61.8% retracement. If you come here, that will be the right, the right level to strike to the upside. Okay, that will be the right level. And on getting here, you don't just, getting anyhow. If you are not super professional, you don't just get in anyhow. You can still wait to see how the market evolve. You see, it's coming down, trending down, turning down, coming down, coming down, coming down. You want to see a change of character by breaking this top. Okay, as a correct, you now take your trade. It's as simple as that. Let me show you an example of how you see a change of character. Can you see this market? This leg is coming down, making it is trending down. Can you see breaking the low, coming down? This cannot break the low again. This cannot break this low. So this has become a higher high, but that is not your trade because there is no confirmation yet. I will show you your trade now. Do you see this last high, this last resistance? You have taken it out. As you have taken it out, then this has become your impulse. This has become your impulse from this level to this level. So you now target 50 to 61.8. Where is it? Right here. Boom. This is what you now target. Okay. And you see the market was very much in a hurry. It just tapped very little into 50% retracement and boom to the upside. I would have taken this trade if I had seen it, because why? If you look at the whole of this impulse, guys, where do you see a big candle? It is only here. That is the demand. That's why from this level, the market shot up to the upside. Do you understand? So this is what you're going to be looking out for. But as far as I'm concerned, I would love to really see that this market just make a clean correction to 50 to 61.8 and then begins a development to the upside. Okay. Euro GBP weekly time frame. Okay, I've seen many who have analyzed this pair, and I have said clearly that this pair is going to make a move to the upside. For me, even though I see the whole of this as a correction and I'm expecting a move to the upside, based on the existing fundamental that is before us, I don't see an euro that will buy massively against the GBP. What has GBP done to that extent that will make euro right now that is in trouble to keep buying against it? It's not going to work that way. And so based on that, guys, I've seen this as a corrective structure. Okay, on a monthly time frame, this is a 3-wave down. I've seen this as a running flat and see a move down. I want to continue to sell euro right now, and this is a confirmed corrective structure, which we call a running flat. Okay, I want to see it break down to the downside, and even if it break down to the downside like that, it's still in line with this with the guideline, because this move to the upside will have to be corrected to about 50 to 61.8. And where do you see it here? It's right here. So it's right for us to see this leg to the downside. Is that okay? That is weekly. On daily time frame. Okay. So on daily time frame, I've seen this structure, and I'm looking at two things. Okay, two structure playing out here. Okay, we could see a 1, a 2, a 3, a 1, a 2, a 3, a 1, a 2, a 3. Okay, I'm looking at this WXY structure on a daily time frame to play out. 3 waves up W, 3 waves down X, and 3 waves down Y. Okay, and if this should play out, what are we going to see that will confirm the that this kind of structure is going to play out? You can see that on our indicator, the 2 indicators have been resetted or have reset to the downside. So all we have to see here is development of trend to confirm that this wave to the upside is going to come. So how do we see that trend development? You go to daily time frame. Okay, you want to see how this market, projects. First and foremost, we are looking for upside, but it's still possible for you to continue to move to the downside this way. So if that is the case, I would like to take a fib of this leg, and I would like to mark 50 to 61.8, which is this level. Okay, then I'll be looking forward to potential move to the downside from that level. So what I'm going to be looking out for is this trend coming here. If it gets to this level and I see a massive push to the downside, I know that that upside I'm looking for is not going to come. Are you getting it now? That upside is not going to come. This is how you use the idea of minor structure and major structure, understanding minor and major structure to confirm the structure that the market wants to do. So as soon as you make this impulse, I'm breaking the minor support structure, which is right here. Let me show you. As soon as you break this level here, then I know I'm in for the downside. I just take a fib of this impulse right here. I'm looking for a retracement to 50 to 61.8 and take my trade to the downside. Is that okay now? But if this does not happen, and instead the market, at this level, just move, break here, come here, do like this, then I take my move to the upside. It means that that initial plan is the one that is going to work. Do you understand? So there are ways market will play, and with the internal structure you are seeing, you will know definitely what the market wants to do. All right, this is how you use idea of Elliott wave theory. You use it to do your forecasting. You use the idea, the knowledge you gain from internal and external structure, to confirm the structure of the Elliott wave theory and to spot the right entry in the market. Okay. Next is GBP USD. See, weekly, you can see that the structure you are seeing right here also corresponds to the existing fundamental with GBP. You see the market pulls down, you see corrective structure, you see another pulls down, you see corrective structure. What are you expecting next? It pulled down. You see, it has to keep going down. It has to keep going down. We need a miracle right now to reset global economy. Everything is bastardized. Inflation everywhere. There is a lot of supply gap all over the nation. Okay, we were just about to get out of COVID, come at us, and Russia came with their problem with Ukraine. I am telling you, the timing of that Russia-Ukraine fight was very wrong. And I'm very sure nobody is laughing right now all over the world. Nobody is laughing. Do you understand? Even an economy that produce the commodities that are highly priced right now, they are not laughing. They don't want it that way because they are making money, and the money is giving them trouble in the economy because the money is fueling inflation. Okay, and the value of their currency becomes worthless because they've got to intervene by mopping out supply of fund in the economy by increasing interest rates. You can't increase interest rates and expect the industrialists to be happy with you, because if you make cost of borrowing to be more expensive, then you have reduced businesses' capacity to expand and improve. And if you do that, and God helping us, we don't tame it, we are going to cause employment problem. because sooner or later there might be recession, and if there is recession, you see many people will lose job, and it's not healthy. Okay, it's not healthy. So coming back to GBP USD, you see the flow is down. All right, so we got to look at the indicator to see what to see if there is a alignment. Can you see the RSI is down? Is down, very weak right now, very weak right now. Okay, so that's weekly. Let's see the daily. You know, I love to see ending structure, you know, study my video on divergence and see the structure that's called an ending structure that will warrant you to check divergence. If you see this kind of structure, it is called an ending structure. So when you see it, just go and check divergence. If there is divergence, you know that the move to the upside is probable. It can either be a move to the upside for corrective structure completion, or a move to the upside for reversal. But since we have looked at higher time frame, like weekly or monthly, and we see that the flow is down, if we check divergence right now and we are able to spot divergence, it means that the move to the upside is probable to complete corrective structure. Is that okay now? So let's go divergence. Let's check divergence. You see that there is divergence. A lower low here. But what do you see here? A higher low. Can you see? And this is reset. The RSI is reset down. So on a daily time frame, we already see that this move to this level is probable for GBP USD. It has no strength. It has no momentum to the downside. Okay, the essence of RSI showing you a higher low is telling you that, oh, I have no strength any longer to move down. And you can see that every cell candle that you see here is sick. There is no one that is healthy there. In fact, you are even seeing a more healthy bullish candle than red candle. Can you see? Just two bullish candle right here. We move to the upside. See how many red candle it took us to come to the downside. It shows that the bearish candles are sick. They are weak. So the market needs to push upside in order to achieve a greater push to the downside. That is what we see on a daily time frame. But honestly, you cannot get into a buy until you see a transition. Okay, until you see a transition, you can see that this wave to the downside, you can see that it's very clear. You see the top, correction, break the low, correction, break the low, correction, break the low, correction, break the low. So what are you expecting now? Where is the last resistance to the top? Can you see? That is the minor structure. All this is your minor structure. Okay, then the correction to the upside is to complete the major structure. That's not what we want to do now. We want the minor structure to be taken. So if we resume market and this market comes to the downside to break this low, fine, this becomes the last resistance, the last top. So you want it to be taken. That is the idea. You want a shift of momentum to take this level. And as soon as you achieve a shift of momentum to take this level, then you now activate 4 entry rules. Activate 4 entry rules. Okay, what are the 4 entry rules? First, you see an impulse. Second, you see, a corrective structure. And when the corrective structure is coming, you must be able to define it, because your definition of corrective structure will give you the idea of the projected fib level. So that is why I had to do a video on Fibonacci retracement. That people just think that retracement to golden ratio of 0.618 is the ultimate. No, we don't use Fibonacci in isolation. The level of Fibonacci retracement is dependent on a factor, and the factor is the nature of corrective structure. That is why you must first define the corrective structure that you are seeing before you even pull out the fib. So if the corrective structure, the first leg is impulsive, just know that it is wave A of the correction, and the wave B will give you up to 50% retracement, and you have another one down to 78% retracement, because there must usually be a fulfillment of equal leg between A and C. And by the time equal leg of A and C is completed, the market must have retraced to 78% retracement. But in a situation where the impulse is big and then the equal leg is not more than 38 and it retraces to 50 here, then for us to get the first leg, rather, for us to get the second leg, it might just come to 61.8. And then from here, you take a trade to the upside. Can you see? So you must allow all these rules to be activated before you take a decision. That is the only way that you get it. Okay. Then let me just show you an example of this kind of structure that I have on. Okay, we are going there. GBP card. We'll get there. We'll get the GBP card. Okay, going there now. You see that kind of structure? I was telling you, this is how it works, guys. This is how it works. Okay, let's start the analysis. Let's go to weekly. Let's go to weekly. You see that on weekly time frame, you see that we're expecting a market that is to go down. You see the up, you see the down, the whole corrective structure. We need this one to go down. All right. And this coming down of GBP card is in line with the fundamental. Okay, it's in line with the fundamental. It's in line with the fundamental, guys. Okay, because right now you see that GBP, you know, is having an inflationary pressure that is due to a lot of problem in the economy, a lot of problem. And GBP and UK is in Europe, even though they are not under European Union. The effect of Russia-Ukraine crisis affect them more. Okay, supply of energy, you know, and a lot of things. But look at Canada, guys. Look at Canada. Canada is having inflationary pressure right now, but their economy is a bit good and is supported by a lot of income they earn from sales of crude oil. Okay, so but right now, both of them are increasing interest rates to just drop inflation. But of course, as an investor, you want to invest your fund in an economy where its own inflation is caused by increase in productivity, not just increase in productivity, but increase in income. Of course, you know, every increase in productivity will definitely lead to increase in income. That's what is happening right now in Canada. I can tell you, the unemployment rate right now in Canada is at the lowest. I think 3%. 3%, that is the best you can get in major economy around the world. Do you understand? So if economy is good and there is inflation that is caused as a result of increase in productivity and economic growth, then even though there is increase in interest rates for that particular currency, you want to buy it because they are not having imported inflation like you have in UK. Do you understand? So if that is our projection for CAD, then it means that we're expecting CAD to strengthen. We're expecting investor, you know, to have priority on investment in CAD at the expense of GBP. That is why we should expect this wave to happen in GBP CAD. Can you now see how we now use the idea of fundamental, you know, to get our technical direction? And if we play out as stated, that would be great for us. So that's why I want to see this structure as a complete structure. Let me show you. You have 3 waves up. After this big impulse, you have 3 waves up. Okay, you have 3 waves down. And I'm seeing this as a 3 waves up, even though the other one is very short. Okay, and then you have a move to the downside. Can you see a move to the downside? That is weekly time frame. Then let's go to 4 hours, even though we will need a corrective structure right now. If you look at 4 hours time frame now, what you will notice is very simple. I've told you, because I've just shown you external structure. everything that happened here, guys, is internal structure. From this level to this level, everything that happened there, you have the internal structure there. But every internal structure, we have a swing point to the top, we have a swing point to the low. So at this point in time, we'll be expecting some correction, okay? Some correction of the external structure. Let me take it to daily so that you see what I'm saying. All right, you see that this move has happened. We want a correction because this market cannot go down just like that in a straight line. It doesn't work like that, guys. It doesn't work like that. So we want a correction for us to have another push down. So it is the development of that correction that we are going to see present itself in terms of the ending structure. It's going to present itself in terms of ending structure. That is why you are seeing, you are beginning to see the market, anytime it's going up powerfully bullish, powerfully bullish, powerfully bullish, powerfully bullish. Can you see? Powerfully bullish. And bearish little by little, little by little, little by little, little by powerfully bullish. Why? Because the market is telling you that at this stage, I want to pull back. Do you understand now? So if you now look at what's happening right here, you will see clearly that you have a swing point, you have a lower low, you have another one, you have a lower low. So right now, we want to see a development happen here. And of course, within this wave to the downside, you are beginning to see what is called an ending structure. A presentation of ending structure to us where we are expecting a pullback or where we are expecting a change of trend is always an indication for us to get ready for an entry. Do you get now? So what do I say you should do when you see an ending structure? You have to pull out your indicator and check whether there is divergence. Right now, right here, guys, what you are having here is, what you are having here, sorry if I'm too fast. I just want to cover a lot of things. Look at it here. Look at this one. Look at this one. Look at this one. But can you say the same thing with the RSI? No. RSI is making a higher high, a higher low, higher low, higher low, higher low. And this one is making a lower low, lower low, lower low, lower low. That is to tell you that a move to the upside is imminent. Okay, a move to the upside is imminent. And then, if you look at your structure, guys, you see the low, you see the high, you see another, you see the low, you see the high here, you see the low here, sorry, low here, you see the high here, you see the low here, broke it. Okay, what happened to the last low, the last resistance? I told you, look for an impulse that breaks it. Okay, and right here, guys, we have an impulse that breaks it. We have the impulse that breaks it. The internal structure is broken. And as soon as the internal structure is broken, all you need to do, guys, is to look for the impulse, look for impulse. What do I say you should do next? Look at, define the corrective structure. That's the second thing. And if you define the corrective structure, it is called a zigzag, A, B, and C. And then the third thing that you need to know is that it is the definition of the corrective structure that will give you the idea of the exact field retracement. That was why I knew that the field retracement of this impulse is going to be exactly at 78% retracement because it is zigzag. And can you see exactly at 78% retracement, it moves up. That was why I gave this trick to everybody in the group, in the trading community. I say it is better you set a buy limit at 0.5430, even when the market was still up here. I say set it at 0.5430. Honestly, those that set the buy limit, it taps 1.5430 and exactly pull back. Within 10 seconds, it made a profit of 15 pips to the upside. Can you see the power of analysis? So, but right now, it was on a Friday. Okay, anything can happen when market open. There could be even a gap. All right. So the analysis we did on Friday at times, I don't respect it on Monday. I like to look at the market and see how it's behaving, because market can decide to come on Monday now, might open, give you a corrective structure here and push down, and then you have lost. And then this structure is still valid for a move to the upside. Can you see now? So anytime you are in a trade like this and you are not able to break even on a Friday, make sure you find a reasonable level to close before, because on a Sunday night, there could even be a gap, and that gap can take you out with a big loss. Is that okay now? So that's what we are looking for in a GBP card. And if this does not happen and the market come and break this low, just make sure that every potential last low is your move to the upside. That is the rule, because we have already spotted divergence. Every potential low is a move to the upside. You break this, correct, and go. Is that okay? Where are we going? You have to come to target this high first. Okay, that was why my TP for this trade was 1.0600, and then I also have 1.62 or so, because I look at this structure. We could take this top, because this is a liquidity point, it's a sweet point, we could take it to target here. That's why I target 1.6200. Then from there, we can have a move to the downside. Because why? Because we have checked weekly and monthly and daily, and the flow is to the downside. But for every powerful downside you need a powerful correction. Can you see? Look at it. Let me show you this to corroborate what I'm saying. This is 1, 2, 3 zigzag corrective structure. Is this not powerful enough? This is a powerful corrective structure. This is a powerful corrective structure that ensures this move to the downside. Do you understand? This is a powerful corrective structure that ensures this move to the downside. So here, we are expecting a powerful corrective structure that will ensure this move to the downside. And it is the preparation of that corrective structure that I have just showed you. You want to trade it to the upside. That is GBP card, guys. Then you have GBP JPY. Okay, GBP JPY. You look at daily time frame. You can you see that the corrective structure that we spotted on Euro JPY is not as is cleaner than what we are seeing right now on GBP JPY. It's cleaner. So as far as I'm concerned, I don't want to have anything to do with GG until I have this move, until I have this trade move down to this level. I don't want to buy, I don't want to sell. If I can have this structure on a daily time frame, 3 wave down, 3 wave up, 3 wave or 5 wave down. If I can have this structure to the downside, where you take this fib and you are having a correct fib level here, 78. If you have it this way, guys, if you have it this way, then fine. I will check RSI. Is RSI positive at this level, just as we saw in Euro JPY? If it is possible, and if it is positive, and then the stochastic also reset to the low, it then means that this signals to me end of corrective structure. So all I have to do at this spot that is circled is to go to 1 hour time frame. I want to see a change of character. I want to see a change of character. Remember that in that case, you'll be having a swing point. This one, correction, correction, this one, correction, this one, correction, this one, correction, this one. And in that case, when a market is about to turn to the upside like that, it's going to develop what is called an ending structure. That's what you have just seen here. You know, in this schematic, it's going to develop an ending structure that is verifiable with the aid of divergence. So once you verify it and you see that there's truly a divergence, all you need to do is to wait to see a shift of momentum that is going to generate your originating impulse. Can you see? Shift of momentum has generated originating impulse and has broken the last resistance. So all you have to do, activate all entry rules. Take a fib, look, define the correction. If it's the one that is suitable for 78, wait for 78. Just as I showed you in the GBP card. You know, if it's the one that is suitable for 50% retracement, wait for it here, take your trade to the upside. This is how to go about it, guys. This is how to go about it. Next, USD JPY. Okay, I've already showed you the setup on USD JPY that I'm expecting next week. You see that on a daily, on a weekly time frame, is powerfully bullish. Nobody can deny that fact that it is bullish. And the bullishness of or how bullish it is, I don't know if I say bullishness, I don't know whether it's a correct English, but then you understand what I'm saying. How bullish it is a reflection of what is happening in the realm of the fundamental. Of course, you know right now that United States is facing a lot of inflationary pressure, and you know the monetary, you know, the Fed, yes, Fed, they keep on increasing interest rates to police inflation. Okay, so as they are increasing interest rate, and these guys in Japan, they kept on, you know, keeping a negative interest rate because they have, you know, an expansionary monetary policy in view at every point in time. Japan always want to protect local investment. They want to protect their local investors because it's an export-driven economy. Do you understand? And because of that, they keep their interest rate negative so that the cost of borrowing will be zero in Japan. And this gives room for Japanese investors to expand their business horizon. It makes them to, you know, acquire a lot of assets. You know, Japan acquire a lot of assets. If you go and check their current account balance, is very healthy. If you go and check their balance of trade, is better than most, you know, tier one economy of the world. So because of this, you as an investor, you don't want to invest your money in a currency that is keeping a negative interest rate. You want to earn rate for your investment. So you would like to invest your money in dollar. So that is why dollar keep on rising against the Japanese yen. Do you understand now? That is the reason why you are having this bullish move. All right. So it's in line with fundamental, and that is exactly what we want to see. We want to see a move that is aligned with fundamental. And if you check daily, you see that, you know, if you check what we call it RSI, you see it's positive, it's above 50, it's positive right now. Okay, it's positive, but we are looking for some sort of correction. But smaller time frame will tell us if we are going to have that correction or not. Right now, it's still going to be very bullish because we still have the move to the upside. Okay, what is telling me, what is giving me confidence that we are still going to be having some move to the upside? Just check. Follow me, guys. Check this top, check this top. Go check this top. Go back to your indicator, guys. Check this top, check this top, check this top. What do you notice, guys? You notice a higher high here. What do you notice here? You notice a higher high here. There is no divergence. This is telling us that there is no imminent breakdown of USD JPY. That we are making a higher high, rising on the price, rising on the indicator. No element of, no sign of a turnaround. So based on that, if I have gotten this on a 4 hours time frame, all I just need to do is to go back to 1 hour time frame, guys, and recognize the last impulse, just as we have here. You know, all you need to do here, recognize the last impulse, get the retracement. What's the nature of the correction? Can you see the first leg of the correction does not even get to 38? That means this zigzag is not going to get to 78. This was what I was trying to explain to you the other time. If the first leg of a zigzag corrective structure does not get to 50% retracement, expect the second leg to stop at 50 to 61.8. It does not get to 78, except if the C is unnecessarily too long. And of course, you know, if it's longer than 1.618 feet extension of A to B, then it becomes invalid. That's how it is. So right now here, this is a valid setup to the upside. So what do I need to do here? What do I need to do here? For me to get my next setup, I want to take the fib of the next leg to the upside. I want to define the nature of correction. I've already have it in mind that we're likely going to have three-wave structure is ending and does not get to 0.338. So all we are going to see is probably a three waves back and then a three waves down. That three waves down is going to hit the appropriate, fib retracement level for us to take this trade to the upside. And this will now be a W, X, and Y. Okay, when we have this, we now all we just need to do is to take this trade right here to the upside to break this top. Okay, so we're going to have opportunity to join the rally in UJ at this point in time. Okay, so next is USD card, guys. I have to remove this, my alert, remove this, correct. So remove all this, go back to weekly. Okay, I've shown this to my guys in the group. If you look at this structure, it's a simple structure. Okay, just follow me. You have this move to the upside. You notice that you have a distinct corrective structure in the middle here. Okay, and then you have this wave to the upside, which is equal to this one. So this becomes ABC structure. All right, this becomes A, three wave down, B, and C structure. Do you notice that you have this one down, which is equal to this one you have down? Can you see? And this ABC has become a corrective structure in B. So this one has become a B structure because it's ABC up. Where is the A? Look at the A here. A. 1, 2, 3, B, and then C. Can you see? But then, if you look at it, A, B, C, what is it correcting, guys? What is it correcting? It's correcting this move. Boom. And then you need this one to move to the upside. Boom. That's why I kept saying, when this was coming down, I said, no, there must be an equal leg between this wave here and this wave here for this market to balance. And there must be a clearance of liquidity at the top. Can you see? We must clear this liquidity before we can make any downside. How do we clear the liquidity, guys? We must break this trend line. All the trend line guys, we are going to make sure they fail here. They are going to be selling here based on trend line, but we are going to make them to fail. Why? The market is going to break all their stop losses and use it as liquidity. By that time, there's equal level between this level, between this wave and this wave. Then you have to move to the downside here to break all this low again. Break all this low again. Do you understand now? So right now in USD card, I'm not interested in the buy. I'm waiting for the sell. Okay, I want the sell to finish before I get it. So all these things that he's doing here is just playing. I'm not sure it's going to get to the downside right now. He can even decide to come and clear this for another move to the upside. Get to that structural level, and as soon as he gets there, we'll now go to lower time frame like 1 hour and see how the trend is developing. Break here, come back here, pull down to the downside. That is USD card, guy. AED USD, guys, daily time frame, just like others. See, this is a very perfect structure. You know, no structure is perfect, but this one is perfect for me. Okay, when you take the fib of this leg, you want a retracement downside, but you notice something. This is going to be a WXY structure in form of a zigzag, because we are seeing a structure in the middle here. Can you see? You are seeing a structure in the middle here. Okay, see a structure in the middle here. Then you see a three-wave structure down. 1, 2, and 3. Okay, you see three wave down, three wave up. Where is the three wave up, guys? Where is the three waves up? See the three waves up. 1 in form of ABC, ABC. Then where is the 3 waves down? 1, 2, 3, but it's not over. Why don't I want to look at it this way? What I want to check is a situation where, you know, we are expecting a pullback in Euro and GBP. So this one will have to give us the same pullback. And we are already having an ending structure here, guys. We're already having an ending structure here, guys. So if you look at it, look at your indicator, look at your indicator. You are getting a higher high, a higher low here, and you are getting a lower low here. So that means that a move to the upside here is imminent for AUD USD. That means that right now the structure you are going to have is a move down, you know, A, B, and C, and a breakdown for us to have equal leg between this 3-wave structure here and what? And 3-wave structure here. And then, and you can see by the time you make a push down, it will have hit 61.8 or 78% retracement. Where we'll be looking for a massive move to the upside that's going to break this top and break this top. Is that okay now? Do you understand? Okay. So now, so what do we do? What do we do? Right now, what's our focus? Our focus is to catch this move that is, you know, showing us, you know, a possible move to the upside. Okay. All right. So we want to have a move to the upside. All right. So we want this move to the upside, guys. We want this move to the upside. So what do? We have seen this on a daily. We need to go to 1 hour time frame. We want to see a change of what? Structure. These are internal structure. I told you when I was teaching you divergence that anytime you see where you are expecting a turning point and you are beginning to see a move like this, what is it telling you, guys? This move is going to come. This wave to the upside is going to come. Okay, it will come. It will come. And when it finally comes, make sure you send the setup to me that I said it will come. All right, check divergence. Can you see? Check divergence on 4 hours. You see it right here, higher low, right here, lower low. Can you see? There's divergence. So I want to see a transition from this internal structure. So you can you see that you have this, you have lower high, you have lower low, you have lower high. This does not break this low. So this is lower high, the same low, lower high, lower low, lower high, lower low. This one is still coming. It has not broken this top. This one can come lower low, no problem. So this one can come, it's in the middle, no problem. But as soon as we break this, now you have a trade coming. All right, because you see this top taking. You have identified your own impulse. All you have to do is to define the nature of the corrective structure, take your fib, and then expect the retracement based on this corrective structure. Okay, and then from here take a trade to the upside. Guys, it's just as simple as that. It's only when market is flashing up or flashing down that it will be hard to make money. But if market is calm, cool, and calculated, guys, very easy to make money. Good. Monthly, I told everybody that cared to listen that gold is going to flush down, okay, to complete a structure. The same way I told you that Bitcoin was going to make 20,000 when we were here. You say whether I was crazy exactly on the 12th of July last year, I said Bitcoin is going to make 20,000, where it was 68,000 that time. Now today Bitcoin has made the 20,000. Okay, I'm justified. Okay, that's just the beauty of analysis. Look at it, expanding flat, straight, and anywhere from here, we are due to make upside. And guys, whenever this upside starts, it will not stop until it hits 80,000. Go and write it down. I have made this forecast, it has come true. I'm making another forecast right here, it will come true. It will not stop until it hits 80,000, okay? I don't know what will happen. The same way I told you when it was 68,000, that I don't know what will happen, but it's going to come to 20,000. But right now too, I don't know what will happen, but it's going to 80,000 when the buy starts. So the question is, I have given you the same forecast in gold. I told you here in gold, the only reason why we miss it was that we're expecting it to still come up. Okay, it failed to come up and it flows down. That was the only reason we miss it. And though painful, but there's no problem. Look at the same structure that was seen in Bitcoin. Very simple structure. You see 3 waves down, 1, 2, 3, 3 waves up, 1, 2, and 3. And then what are we expecting? 1, 2, 3, 4, and 5. Okay, by the time you get here, look at a powerful demand level. Look at a powerful demand zone here. Can you see this candle here? It's not a small candle between here and here. Okay, we're expecting gold to make a move between this level. Expecting gold to come over to this level, guys. So all we're expecting now is that for us to take action on gold, we want to see a correction happening right here. We want to see the end of this wave, number 1. 2, we want to see a pullback here, number 2. And after that, we bring it down to lower time frame, like 1 hour, and see a change of character. Get in and get this wave to the downside, guys. That's what you do in gold. That's the setup in gold. Okay. Then for those that trade US 100 indices, okay, I want to get into this particular NAS 100, that's US 100. I want to trade it. Okay, I'm looking forward to buy it this week. You can see that we have appropriate corrective structure in a daily time frame. Can you see we have appropriate corrective structure, equal leg requirement fulfilled. If you go to fib extension 2, can you see right now we're exactly at the spot where we should buy, exactly at that spot. Okay, but you just have to be careful because right now stock markets are falling, and if stock markets are falling, then you should know that excuse me, indices will also fall. Right now, the US in the US stock exchange and top 100 companies, capitalized companies in the US stock exchange, they are not finding it funny. They are falling. The shares are falling. Then that's why you see this indices fall this way. But is it going to fall forever? Of course, no. So now let's go to lower time frame and see what's happening there. Okay, that's what's happening there. So what I'm expecting this week is simple. If you trade indices, listen to me very carefully. 8 hours. Can you see a beautiful structure? All right. So you have a move down. You have a move up. 1, 2, 3, running flat, up. I want this pair to get to this level. By the time you get to this level, we'll have gotten equal leg of this wave down here, exactly at this level. Yes. Okay. And this will be a corrective structure for another move down. This will be the potential last move down. I know something spectacular will happen and the stock market will rebound and will start moving up. But let's focus on it one after the other. We're expecting this wave to the upside to happen. Then, you know what I do? I go to my indicator. I want to see. Indicator gives me the end of corrective structure, guys. The end of corrective structure. You know that we have 1, 2, 3. If this level here mark the end of corrective structure, then as you see a perfect alignment to the low on my RSI and my stochastic. Can you see? reset to the low, reset to the low. That is a signal of the end of corrective structure. Another signal that shows me that this wave to the upside is going to come is the fact that I am having RSI above 50. It's showing me strength. That is a show of strength. So if that is the case, what do I need to do? I just go back to 1 hour time frame. I want to see internal structure that leads to the end of that corrective structure in the external. So where is it? Where is that internal structure that comes down? Look at it here, guys. Look at it here. Push down, correction, push down, correction, push down, correction. Did it break this level again? No. So this has become a higher low. So, and the higher high here is broken. So all I just want right now, when market open, I want to see the end of this wave to the upside, then come over here, pick my fib through, take my fib, let's say it ends here. I want to define the nature of corrective structure. If it is zigzag, I want it to come to 78. If it is other one, I will know the right thing to do. You know the rule. Then I'm going to take this trade right here to the upside. Boom. Stop loss here. Boom. Where am I going? Where am I going, guys? Take it back to daily time frame. Daily time frame will tell you where you are going. Okay. Where do you achieve equal leg? Can you see? We are taking trade from 1 hour and we are targeting daily. Where do you have equal leg? Boom. Corrective structure here. Boom. So it's going to be here. All right. That's about 1 to 6 risk to reward, guys. This is a trade I'm going to be taking. Okay. And once we get to this level, we expect more downside. Because why should we expect more downside? Because you see that this has become a 3-wave corrective structure in form of A, B, C. This is A, B, and C. And then after A, B, C, you want a move to the downside. The only condition, guys, that we're not going to have a move to the downside after this trade is taken is this. Watch me. All right. If you have this one break up very well, then you can have another 3-wave corrective structure to correct the 50%, to get the 50% retracement of this 3-wave up. And then from there, you have another trade again to the upside. It then means that the down wave is over here. The down wave is over here. And then we are proceeding with a leading diagonal in wave 1 for the ultimate move to the upside. Do you understand? We are proceeding with a leading diagonal. 1, 2, 3 up, 1, 2, 3 down, then 1, 2, 3 up, 1, 2, 3 up. Okay, so that will be WXY up in form of an impulse. So that is a 5 waves impulse. 1, 2, 3, 4, 5. You will be looking at it as a WXY. Do you know that we have 3 types of impulse? You have a mono impulse, which is a 1-wave impulse, and then you have a 3 waves impulse, 1, 2, and 3. Okay, and you have a 5-wave impulse. But the problem that I have with most people is that they only recognize a 5-wave impulse because ELLIOTT wave only discuss a 5-wave impulse. But I'm telling you here that you can have a 3 waves impulse and you can have a 1-wave impulse. This 1-wave impulse is what is called a mono impulse. Okay, let's move. These are ideas that you are getting for free. That is only when you are in my mentorship group that I take you to that realm. Okay, but okay, I'm in a good mood today. Let me give you for free. All right, let's go. So that's the only way we are going to have this trade. And as soon as you get that, this is no longer a corrective structure. It's no longer a corrective structure, guys. This particular move is no longer a corrective structure. It's a leading structure. For what? For more upside. Is that okay, guys? So I spent a lot of time to analyze a lot of setup. I think I'll have to just show you one more setup before we go. One more setup, CAD GPY. I love that setup. I know it's going to play out CAD GPY. I'm going to show you CAD GPY before we go. You see what I was telling you about equal legs? You see this? You see this move to the downside? You see with A, after that, 1, 2, 3. And then you see the importance of daily chart, guys. I don't know why people Just keep on trading. Their higher time frame is 1 hour. Their lower time frame is 15 minutes. You are wasting your time. If you spot a structure in daily time frame, guys, you will make this money. You will make this money. This is a structure. Although I did not spot it on time, that was why I did not take this trade. This is a regular flat. Just remain a little push to the upside. That equal leg of this wave and this wave will come. And then you see this wave right here, it's going to come here, downside. I'm waiting for that one. Okay, I'm waiting for that one. But I told you in the daily time frame that this equal leg will come. Can we prove it in smaller time frame? How the market is preparing itself to achieve this move. Let's go to 1 hour. You see what I'm saying now? Can you see that in 1 hour time frame, guys? In 1 hour time frame, you are saying, you see, this wave is what we want to still make upside, Abby, to go and complete a structure. See how the market is developing a structure to catch up with that wave. Can you see? Let me show you. 1, 2, 3. 1, 2, 3, and 1. That is a 3 waves up. Okay, 3 waves to the upside. After a 3 waves to the upside, what do you expect, guys? You need a 3 waves back. 3 waves back. And where is the 3 waves back? 1. Zigzag in the middle. So this is a short trade. This one is going to come here. Okay? And then by the time you come here, take a view of this wave here. Where is 50 to 61.8, guys? Exactly here. By the time you get here, guys, can you check for me if we have equal legs? 1, 2, and 3. Where is it? Boom. Can you see all the confluences are coming together? Then by the time you get here, guys, what you are going to see is a move to the upside, 3 waves. To go and get to that level I told you on a daily. Look at where I told you it's going to come to. It's going to get to this level. That is the level where you will have achieved equal leg between this wave and what? And this wave. And then this one in the middle, A, B, and C in the middle. And then you now have, because this wave has broken this level, expect this move down to break this level. Okay, that is a corrective structure for a move to the upside. Is that okay now? Is there any question, guys? Is there any question? Is there any question? Okay, so in the absence of no question, you said what?
Good afternoon, sir. I have a question, please.
All right, what's your question?
Sir, it's about this forecast for Euro GBP and then Euro JPY.
Okay.
Now, from your forecast, I don't know if I missed it anyway, but that you forecasted that Euro GBP is going down.
GBP is what?
That Euro GBP is going for the sell, like it's going down.
Yes.
But then Euro JPY is going up. Isn't that contradictory? Like two-way traffic for the euro?
It's a Euro GBP and a Euro. Did they tell you that anytime euro is to go up, all the euros will go up?
No, but in a
okay, let me show you something. Hold on. All
right.
Let's go to Euro JPY. Daily. Is it bullish or bearish? Is it bullish or bearish?
You mean Euro JPY?
Yes.
It's correcting downwards. It's bullish.
Correct. Let's go to Euro card. What happened? Bullish? Bullish? Is it bullish or bearish?
Bearish, sir. Bearish, sir.
Are they not both Euro pairs?
Oh, I understand now, sir.
Analyze what you see. Analyze what you see. Forget about Euro, card. Analyze what you see. Okay? It is what you see that you analyze. Forget about There's no correlation between Euro CAD and Euro GBP. All right. Analyze based on, look at the peer, look at the individual currency, look at individual economy, look at how they relate, look at their relationship, see what is happening right now, then look at it whether there is alignment between what you are seeing in the realm of the fundamental and that of the technical. So when you see that there is alignment, then you go ahead. If there is if there is conflict, you now wait for more data. Wait for more data before you take action. Okay, so that is how it is. All right, so I'm going to make the webinar, I'm going to make the video available on YouTube. If you want to watch again, you can watch. If you are here, you have not subscribed to my channel, just do so. Like and comment on the video so that YouTube can show it to more people, so that many more people can get to see the truth about chart analysis and forget about the conventional way to look at the market. All right. So have a lovely day, guys. Bye-bye.
You too, sir. I look forward to watching the video again.
Yeah.